What is fixed cost and variable cost? What is the basic need to start or run a business successfully? Costs are the expenses incurred during the process of creating a new business. This is including a business plan, research expenses, borrowing costs, and expenses for technology. What is cost? The costs are the basic expenditure to run a business. All the factors of production associate with the cost. For example, the cost of labor used in the production of goods and services is measured in terms of wages and benefits. However, the cost is divided into two types. These are fixed and variable costs. Fixed costs mean the costs which do not vary or which remain constant within a given period of time. Fixed costs do not vary with output or how the business is performing. If you want to determine the fixed cost, consider the expenses you would occur if you temporarily closed your business. Overhead expenses can be fixed, meaning they are the same amount every time, like rent and insurance. Hence, the fixed cost is also called the overhead cost. Fixed costs are less controllable in nature. Hence, they are not dependent on the production factors such as volume. Fixed cost is including rent, insurance, loan payments, buildings, etc. Next, variable cost. Variable costs are costs that vary with output. Variable cost will change as per the change of the production. Depending on the volume of production in a company, the variable cost increases or decreases. In other way, the variable costs change over a period of time, and these are directly associated with the business activity. These are based on the business performance and the volume of services the business generates. The direct cost or prime cost, also called as variable costs, because they directly affect the outputs. Variable costs may include wages, utilities, materials used in production, etc. Let's differentiate the fixed and variable cost. First one is nature of cost. The fixed cost may change after a certain period, but variable cost based on the volume of production. It increases or decreases based on that. Next, on the basis, fixed costs are time-based, but the variable costs are activity-based. Next, based on incurred. Fixed costs are incurred irrespective of any units are produced or not, but variable costs are incurred as and when any units are produced. Next, based on unit cost. Fixed cost decreases with increase in number of units produced, but variable cost remains same irrespective of number of units produced. Next, on the basis of control. Fixed costs are not controllable in the short run, but the variable costs are controllable in the short run. Examples: rent for building, insurance, tax, etc. Salaries of employees, raw materials purchase, packaging charges, etc. Let's summarize what we have learned so far.